In this video, I'm going to teach you on how to trade and predict CPI news using the simple strategy that I'm about to show you right now. Okay, family, I want to teach you on how to predict CPI, and I have a very simple presentation here for you. So, of course, we are trading using correlation as well as a strategy that I'm about to share with you shortly. So, of course, we are on the US dollar and NASDAQ. And as you can see here by the screenshot from the previous NFP, which is February the 13th, as you can see there, this is the numbers that came out, right? Many of you on the previous video about NFP, you did ask me if this the very same strategy I taught for NFP, does it work for other events? And we'll get to see it here if it does. Right, but as you can see, if we can go into the CPI month over month and year over year, you can clearly see here on year over year it says 3.4, which is the previous, and of course we have the 2.9, which is the forecast. Okay, so as you can see, whenever the forecast is higher than the previous, the market gets to be bullish, right, in terms of the US dollar. And we can clearly see it here. But now it gets a bit tricky with the CPI. We can't just use the same NFP strategy that I presented to you. NFP with these numbers is much more respectable, more stable to really move according to the outcomes of the predictions of this numbers on the news calendar. If you're wondering what news calendar I'm using here, this is Forex Factory. I do use investing.com to kind of predict news. So, but nevertheless, the point that I'm trying to show you, this works, but doesn't work fully. So I'm going to teach you a strategy that's only meant for the CPI and not for other events. Okay, so the first thing and foremost, on the 15 minutes time frame here, you can see USDJPY and also see NASDAQ. One common thing that I want to outline to you that is going to be the key recipe of this strategy is that at least if you're going to look at the London trend and you're going to look at its movement, you want to trade against the movement that it established. So at least if you're on the market 10 minutes before your news takes off, or even 5 minutes, or no matter at what time you are, I don't want you to be hours there, right? Because this London trend will still be taking place. Let's say you're 10 minutes before the news takes off. You look at the London trend for the day. What was it? Was it bullish or bearish? The most likelihood of CPI trading against that is very high. Okay. Now, on this one, it doesn't really quite show it as much. That's why I'm saying we're going to be using USDJPY to predict the CPI because, of course, it's a US dollar news, and we use the power of correlation to trade NASDAQ and gold, as other people were asking on the previous video. Let's go to another example here, then we can get into the basis of this strategy. So now as well, we have the 11th of January over here. And of course, here are the results of that in terms of the numbers. So as you can see here, month over month, CPI and CPI year over year. This is what stands for there. So as you can see, the previous was 0.1. The focused was 0.2. So they predicted it should be higher. And of course, it came out even way higher than what they predicted. According to the strategy that I taught on NFP, if we have this data, that means the US dollar, in terms of what I taught to say if the forecast was going to be higher, if the previous was going to be higher than the forecast, then it should buy. But in this case, the previous is lower than the forecast. That means USDJPY should sell according to the NFP strategy. So the NFP strategy here does not work on USDJPY. That's why I'm going to come up with what I'm teaching you over here. As you can see, it also failed here. The previous was lower than the forecast, right? It only works on NFP. But as you can see here, we're going to be depending on chart. And I picked this because I look at what happens and it repeats itself a lot in the market. That's how we create trading strategies, is we look at the pattern of the market and we pick that pattern, we run it through, and we see what statistics did it present in terms of its accuracy and probability. Hence, I'm able to come here and teach you. So if you do appreciate this, please make sure to like, subscribe, and also share this video with other people that need it. Okay, so we go on here. Look at this USDJPY. The London trend was bearish. When it came in, of course, it spiked in slightly and pushed all the way up into being bullish. The very same thing here happened on NASDAQ. So, but I would like you to always concentrate on USDJPY or DXY if you want to go into the dollar index and use that to predict CPI rather than using a pair that is only a confluence, or rather a correlation of what happens on the dollar. So for example, this one bought, and we can see NASDAQ sold. And we can clearly see the trend there. It was a bullish trend of the London session, and the market, of course, sold beautifully on CPI. Okay, so let's get to the prediction of this. Okay, predicting CPI. Of course, we're going to use the US dollar JPY, or we're going to use the US dollar index, okay, to predict CPI. This is going to be your main pair. And of course, the time frame that there you're going to be, it's going to be on the M50. What you're going to do, step one, you're going to trade against the M15 trend. Okay, step two, London trend of the day. That's what you're trading against. Which M15 trend? It is the London trend of the day. Okay, if you don't know how to mark this London trend, when it started, when it finishes, you can put overlays on your chart. Trading View does provide such. Just say London sessions or trading sessions, to put them in different colors to highlight when a certain session has started and when it's overlapped, when it ends, things like that. Okay, I would advise you again, when you're about to look at this whole trend, as I was looking at it here, look at it 10 minutes, 5 minutes before the news takes off, right? I'd advise 10 minutes so you prepare yourself in terms of trade execution. Okay, and of course, this is now where it gets tricky. If the trend is ranging, then there will be a possible whipsaw. Now, I taught something last time. So when we're talking about a whipsaw, it's basically when the market goes up and down. So when the news comes in, instead of going bullish or bearish, it's indecisive, therefore it goes multiple ways in a matter of seconds. This is a very dangerous news movement. Many of the people cannot predict this. We can, of course, using our trading method only in the mentorship. Okay, but of course, as I taught in the previous video about NFP, 3 types of news behaviors. We have trend following, we have pullback news impacts, as well as whipsaw news impacts. So of course, as I'm teaching you this, I'm teaching you a trend following, basically where the market has been in a bearish trend and the market sort of takes off following the previous trend of the day, which was bullish. And of course, when it comes in within a day, it has to open up bearish for the London session in order to be bullish for the CPI, and vice versa as well. If it was bearish the previous day, it will need to open bullish in order to continue selling. I hope you understand this. Now let's jump back into the presentation. Okay, now speaking about managing risk, a lot of people, when we teach such trading methods, they take it as a ticket to gamble. Guys, news trading, it's the same as scalping. In fact, it falls under the same category as scalping. So we cannot just jump into going full margin because we're going to make a lot of money in a short space of time. I wouldn't advise that. A lot of traders of TikTok are going boom in, right? Trying to trade this. And that's not the right mentality to approach news trading. You would rather say you want to risk 1 or 2%. It will still make you a reasonable outcome if the news goes in your direction, as well as you will lose quite a reasonable amount that won't blow your account if you lose, provided that you also put a stop loss. One other rule that I have about trading news, about being a trader in general, is that if you're unsure, do not trade. If you're unsure about the direction, do not trade it. And when I mean unsure, I don't mean you being emotional unsure. Rather, you have factual technical information on the chart that make sure that if your stuff are not aligning, therefore do not trade. If every confluence within your book is aligning to what I've just taught over here, then take the trade, but bear in mind risk management should be the key. Okay? And of course, you must put a stop loss. A lot of people trade news without stop losses. Unless you are on your phone monitoring the trade, I wouldn't advise, especially if you want to go big, as I've already advised not to go big, because you may lose your capital given the behavior of news impacts is not always predictable for one who's just starting, right? So always put a stop loss away from structure. If you go with me to the previous screenshot over here, you'll see something that this was the last higher high and the market spiked it. So when I mean away from structure, please set your stop loss a little bit further from structure that can be easily spiked into, and the market kicks out your stop losses and sells. So if it was here, I would put it 30 pips away. This is like more 5 pips, 10 pips where the market spiked into. So 30 pips, 20, 50, somewhere there. You understand your risk. You risk more, risk what you can afford to lose. Okay? Let me go back to managing risk over here. Did we establish? Yes, we did. So managing risk, stop loss. And then on your take profit, you want to take profit on the next available structure. So if it was a bearish market, you want to take at the last previous structure. Let's say it was a lower low that the market had imprinted. We're now going to create a new lower low that we've created a new lower high, for example. Then you take it at the next structure. I'm not sure if you understood when I was talking about lower lows and lower highs. For example, let me just make here. For example, if you bought here in the market, you should consider to be taking your profit at the next structure. Okay, even here, I believe there was a structure to the left that impacted the market. So you don't want to be greedy holding 1 or 2 minutes into the news candle. That's it. Holding your trade. Okay, as far as execution is concerned, you want to enter your trades 1 minute before the news takes off. Some may even go as extreme as having a timer on your phone and you can enter 10 seconds, 15 seconds, but that depends on the execution speed of your broker or your prop firm if you are trading this on a prop firms. I would also advise in terms of managing risk is that you ought to backtest what I just taught you. Don't jump into trading it right away on a live account because you're desperate to make money. No, that's not the way how trading works. You got to develop confidence in the results that you see within the long run. Go into a backtesting software and apply what I just taught you. See how it works. See the statistics of how good is it. Then when you risk on a live event or on a live account, you know for sure what you're working with. Doesn't just get you by surprise. Trading shouldn't get you by surprise, whether it's going to be a stop loss hit or take profit hit. You should know the probability involved within your trading method. Okay? And with that being said, that's the end of this presentation. I would like